Welcome back, everybody, for another deep dive. Today, we're heading over to China
Oh,
to
cool.
explore the world of quant investing there.
Awesome.
And our main focus is going to be this guy, Liang Wenfeng,
Okay.
a real trailblazer in the field who founded a super successful quant firm called Fantasia.
Fantasia.
Yeah.
Okay.
So basically, we're going to get a glimpse into this whole world of AI-driven trading in China.
Sounds fascinating.
Yeah, it's a pretty wild ride.
I'm sure.
But I think what's really cool is that by looking at Liang's journey and his predictions about where the industry is headed, we can learn a lot about how this whole thing evolved.
Yeah, for sure. I mean, his story is like a window into how quant investing went from this niche thing to a major force.
Totally. And you might not think that a software engineer would be the most likely person to be like spearheading AI-driven trading.
Yeah, you wouldn't think that, right?
But Liang's story is anything but typical.
Okay.
So back in 2008, he got inspired by none other than Jim Simons.
Oh, wow.
Yeah, the quant legend himself.
Yeah.
And he decided to take a chance on this whole quant investing thing, which was still super new in China at the time.
I mean, that's pretty amazing to recognize a trend before it even becomes mainstream and then have the guts to just dive right in.
Right.
Especially back then, quant investing was barely a thing even in the US, let alone China.
Exactly. It
Yeah.
was like the Wild West of finance.
I bet.
So Liang basically took this huge leap of faith. He left his cushy software engineering job at this big tech company, set up shop in a rented apartment in Chengdu, and spent 2 years just obsessively learning everything he could about quant trading.
Wow, that's some serious dedication.
Yeah, talk about being all in.
It's that kind of passion that really drives innovation. It's
Yeah.
not just about profits, it's about solving these complex problems and pushing the boundaries.
And that's exactly what Liang did. So in 2010, he and his team saw this opportunity with the launch of the Shanghai and Shenzhen 300 stock index futures.
Oh,
And they basically rode that wave and made some pretty impressive gains. They boosted their managed funds to over 500 million yuan.
wow, that's got to feel good. Talk about validation.
Oh yeah, that was a major turning point for them. Not just financially, but in terms of the experience they gained.
Yeah.
It really laid the groundwork for everything that came after.
I can imagine.
And what came after was Fantasia. In 2015, Liang and some of his buddies from Zhejiang University founded this firm with a clear mission. They wanted to become the top quant hedge fund in China.
Ambitious.
Oh, yeah, for sure.
Yeah.
And their secret weapon was this idea of combining the power of math with artificial intelligence.
Okay, so they were really ahead of the curve there, right?
Totally. They recognized the potential synergy between those two fields before pretty much anyone else.
I mean, that's pretty visionary when you think about it.
And they didn't just dip their toes into AI, they went all in. By 2016, they were already executing their first AI-driven trades, years before this whole AI craze we're seeing now.
Wow, so their whole trading strategy revolved around AI. That's pretty radical for the time.
It was. And to do that, they had to build the infrastructure to support it.
Makes sense. You can't run complex AI models without some serious computing power.
Exactly. And they were investing heavily in this, even before a large language model became a thing. So in 2019, they spent a massive 200 million yuan to build this AI computing cluster they called Yinghuo 1.
Yingwei 1.
Yeah, it had over 1,000 GPU cards. Imagine the processing power.
That's insane. Like a supercomputer dedicated to just quant trading.
Pretty much. And to put it in perspective, this was even before concepts like Tesla's Dojo supercomputer were really on the radar.
So they were way ahead of the curve.
Oh, yeah. But it didn't stop there. When NVIDIA released their A100 chip, which was the most powerful GPU at the time, Fantasia was one of the first in Asia to snag them.
Wow, they were really on top of things.
And that allowed them to create Yinghuai 2 in 2021. This thing was even bigger and badder, with 10,000 A100 cards. We're talking about the processing power of hundreds of thousands of personal computers all working together.
It's mind-boggling how much computing power they had at their disposal.
It was like they were building a spaceship while everyone else was still figuring out how to ride a bicycle.
That's a great analogy. It's clear that their dedication to investing in AI infrastructure really paid off.
Big time. What seemed like an excessive investment back then turned out to be incredibly prescient. It's like they built a racetrack before anyone else even knew cars existed.
I love that analogy.
Now, there's another fascinating part to Fantasia's story. They created this subsidiary called DeepSeek, which focuses on general-purpose AI.
DeepSeek. Okay, I haven't heard of that one.
Yeah, it's pretty cool. It shows how ambitious they were.
Yeah.
They weren't content with just dominating the quant investing world. They wanted to be major players in the whole AI landscape.
That's thinking big.
Right. And what DeepSeek has accomplished is seriously impressive, especially
Oh,
considering they only have like a small team of around 139 people compared to these giants like OpenAI.
wow, that's a tiny team for such a huge undertaking.
But they've been incredibly successful. And it really highlights the power of focused innovation. Instead of just copying others, they developed their own unique AI architectures, like MLA and DeepSeekMo.
So they were really pushing the boundaries of AI research.
Absolutely. And these innovations were key to their success because they allowed DeepSeek to train and run their models much more cost effectively.
Ah, so that's how they were able to compete with the big guys.
Exactly. And that had ripple effects throughout the whole industry.
In what way?
Well, their DeepSeek V2, which they released in May 2024, made a huge splash because they offered API access at a tiny fraction of the price OpenAI was charging for GPT-4 Turbo.
Oh, wow. So they basically forced everyone to rethink their pricing models.
They did. It was a bold move that ultimately made AI more accessible to a wider range of developers.
That's pretty cool. It democratized access to powerful AI technology.
But that wasn't all. Then they launched DeepSeek V3 just a few months ago, and this thing blew everyone away. It outperformed even the top open source models and rivaled closed source giants like GPT-4 in benchmarks.
Seriously. So they were beating the best of the best.
And they did it at a fraction of the cost.
That's amazing. It's like a classic David and Goliath story.
It really is. And it challenges this assumption that Chinese AI companies are just playing catch up.
For sure. They were leading the charge in a lot of ways.
And they're committed to open science, too. They open sourced 6 smaller versions of their R1 model, which is on par with OpenAI's latest model when it comes to things like math and coding.
Wow. So they're not just keeping their breakthroughs to themselves, they're sharing them with the world.
Exactly. They want to help push the entire AI community forward.
That's a refreshing approach. You don't see that enough in the tech world.
I know, right? So it's clear that Liang Wenfeng and DeepSeek are on this mission to democratize AI. But now let's shift gears a bit and talk about Liang's predictions for the future of quant investing in China. Specifically, back in 2019, he gave this speech titled, "A Programmer's View of the Future of Quantitative Investing in China." And it's full of insightful observations about the industry's potential.
I'm curious to hear what he had to say. This is where we see how all these technological advancements can actually impact the financial world.
Yeah, for sure.
Yeah.
And Liang really had a vision for where things were headed. He drew some interesting parallels between the U.S. and Chinese asset management industries. He pointed out 2 major trends that were happening in the U.S.
Or this.
One was the increasing indexation of mutual funds,
Okay.
and the other was the rise of quant hedge funds.
Right. So he saw those same trends playing out in China.
Exactly.
Uh,
And he believed that Chinese quant funds still had a ton of room to grow.
I can see where he'd think that.
Like if you compare the size of even the biggest Chinese quant firms
Hmm.
to something like Bridgewater Associates, which is the world's largest hedge fund,
Right.
which manages around $1 trillion yuan,
Yeah.
you can see there's a huge potential for growth in China.
That puts things in perspective. I mean, if the Chinese economy keeps growing and reaches a similar scale as the U.S., the top quant firms in China could be managing trillions of yuan in assets.
Exactly. It's mind-boggling.
It really is.
But Liang was also careful to point out that quant funds aren't just about high-frequency trading. They use a diverse range of strategies across various asset classes.
So it's not all about just speed.
No, not at all.
No.
It's about applying quantitative methods to all kinds of investment approaches.
Like what?
Well, it could be anything from analyzing macroeconomic trends to evaluating individual companies.
Okay, so it's a much broader approach than people might think.
Yeah, for sure. And in a way, it mirrors how the quant industry evolved in the U.S.
Interesting. So what exactly is Liang's definition of quantitative investing?
He keeps it pretty simple.
Yeah.
He says it's basically decision-making driven by quantitative methods.
Okay, so it's all about using data and algorithms to make informed investment choices.
Right. But he also emphasizes that humans are still crucial for research and development. It's the humans who create the algorithms and make sure they're constantly improving.
So it's not about replacing human expertise altogether. It's about augmenting it with the power of AI.
Totally. It's like having a team of super-powered analysts constantly crunching data and finding opportunities that humans might miss.
Right. But humans are still essential for guiding the process and making sure the algorithms are doing what they're supposed to do.
Exactly. It's a partnership between human intelligence and artificial intelligence.
That's a good way to put it. So let's dive a little deeper into the specifics of the Chinese quant landscape. What are some of the main strategies that these firms are using right now?
But right now, equity strategies are definitely dominant in China.
Okay.
These include things like models that analyze price and trading volume models that focus on intraday reversals, models based on fundamental factors like company earnings, and models that try to predict the impact of specific events.
So there's a lot of variety in their approaches.
Yeah, for sure. It's not just about chasing short-term price movements.
Yeah.
Some of these strategies actually take into account the underlying fundamentals of a company.
That's good to hear. It means they're not just blindly following algorithms.
Right. And what's interesting is that there's a shift happening from traditional multi-factor models,
Hmm.
which look at a fixed set of factors,
Yeah.
towards more AI-driven approaches.
That makes sense. As the market gets more efficient, those older methods become less effective.
Totally. Plus, there's this intense competition among quant firms. Everyone's trying to develop the most sophisticated strategies to stay ahead of the game.
It's like a constant arms race.
It really is. So it's this constant race to innovate. And that brings us to the question of what's next? Where do we see Chinese quant strategies heading in the future?
Yeah, that's the million-dollar question. What's the next big innovation going to be?
Well, that's exactly what we're going to explore in the next part of our deep dive.
Yeah.
We'll delve into Liang Wenfeng's predictions about the future of these strategies and what they could mean for investors like you and me.
I'm intrigued.
Stay tuned. It's going to be good. So we just left off talking about how competitive the quant field is in China. Everyone's trying to find an edge, and that makes you wonder what the next big innovation will be.
Well, Liang Wenfeng actually had some thoughts on that. He predicted that as markets become more efficient, traditional quantitative strategies, the ones focused on just technical analysis,
Right.
those would become less profitable.
Yeah, that makes sense. If everyone's using similar algorithms to analyze price patterns and exploit those little market inefficiencies, those opportunities are going to disappear pretty quickly.
Exactly. So Liang believed that quants would start to turn their attention to a new frontier, quantifying fundamental analysis.
That's interesting. Fundamental analysis is about digging into a company's financial statements,
Yeah.
understanding their business model, assessing their management team. It seems like a very human-driven process,
Yeah.
involving a lot of judgment and intuition.
You're right. It's not as straightforward as just analyzing price trends or trading volume. But Liang argued that it's not impossible to quantify these more qualitative aspects of fundamental analysis.
Okay, but how?
Well, he pointed to successful U.S. quant firms like AQR Capital Management as
Oh
evidence.
yeah, I've heard of AQR. They're known for their quantitative approach to investing.
Exactly. They've developed these really sophisticated models that can analyze massive amounts of data. Everything from company financials to news sentiment to macroeconomic trends.
So they're using AI to sift through all that information and identify companies that might be undervalued or overvalued by the market.
Exactly. And Liang believed that these same techniques could be applied to the Chinese market as well.
Okay. But aren't there unique characteristics to the Chinese market that might make that difficult?
Sure, there are always unique factors to consider, but the underlying principles of fundamental analysis remain the same regardless of the market.
So it's not about replacing human analysts altogether. It's more about using AI to augment their abilities, giving them powerful tools to process and analyze information at a scale that wouldn't be possible manually.
That's a great way to put it. And this shift towards quant-driven fundamental analysis has some interesting implications for the industry. It's going to raise the bar in terms of sophistication and resources. Well, I think it's likely to lead to a market that's dominated by larger, well-equipped firms, the kind that can afford to invest in the necessary technology and expertise.
Yeah, I could see that happening. Well, what does that mean for ordinary investors? Does it leave them with fewer options or put them at a disadvantage?
Not necessarily. It's important to remember that quants, even with their powerful tools, are primarily profiting from inefficiencies. They're searching for those tiny discrepancies in pricing or information that give them an edge.
So they're not really going after the same returns that an average investor might be seeking.
Right. Think of it this way. There's a rising tide that lifts all boats. That's the overall growth of the market, what we call beta. And that growth remains accessible to everyone, regardless of whether you're using complex algorithms or a simple buy and hold strategy.
Okay, that's reassuring. So it's not about trying to outsmart the quants or compete with them on their own turf. It's more about recognizing that the landscape is changing and finding strategies that align with your own goals and risk tolerance.
Exactly. And in a market that's becoming more efficient in part because of quant strategies, a passive approach like index investing becomes even more compelling.
I've always been a fan of index investing. It's a simple and effective way to capture the market's overall returns without having to pick individual stocks or time the market.
And Liang himself acknowledged that even in a market dominated by quant funds, there's still a role for traditional fundamental analysis. He believed that both sides, quant and fundamental, would continue to learn from each other and adapt to the changing dynamics of the market.
So it's not necessarily a zero-sum game. There's room for different approaches to coexist and potentially even benefit from each other's insights.
Exactly. It's an evolving ecosystem.
Yeah.
And understanding how these different forces interact is key to navigating the markets of the future.
This has been incredibly insightful. We've covered so much ground, from Liang Wenfeng's journey to the rise of AI-powered trading to the potential impact on fundamental analysis.
And now we're approaching the big question that underpins everything we've discussed. What happens when AI truly becomes the dominant force in the markets? How will that reshape the information landscape itself? And what kind of knowledge will be most valuable in this new era?
Those are big questions.
Mm-hmm.
It feels like we're on the cusp of a major transformation in finance, and it's both exciting and a little daunting.
It's a lot to unpack, and that's exactly what we'll do in the final part of our deep dive. We'll explore some potential scenarios and try to shed some light on what the future might hold for investors like you.
Okay, so we've been really diving deep into this whole world of quant investing in China, especially how AI is reshaping everything.
Yeah, it's been a wild ride.
It really has.
Yeah.
And it's pretty clear that we're heading towards this future where machines play a way bigger role in the markets.
No doubt.
But what does that actually mean for everyday investors like us? Should we be worried?
Well, I get why you'd be a bit apprehensive, hearing about these super powerful algorithms making split-second trading decisions.
Yeah, that sounds kind of scary.
But remember what we talked about earlier. Quants mainly profit from finding and exploiting those little inefficiencies in the market. They're always on the hunt for mispriced assets or those super short-lived opportunities that give them an edge.
So they're not really directly competing with us for the same returns.
Exactly. The overall growth of the market, what we call beta, that's still up for grabs for everyone. And as markets get more efficient, thanks in part to those quants, a simple passive approach like index investing becomes even more appealing.
Okay, that makes me feel a little better. I don't need to suddenly become a quant expert to still benefit from the market.
Not at all. It's more about understanding the forces at play and choosing strategies that make sense for your goals and how much risk you're comfortable with.
Right, right. But here's where things get even more interesting. Liang Wenfeng predicted that as AI gets even more powerful in trading, it'll actually change how companies are valued and how information gets baked into market prices. Could you break that down a bit?
Yeah.
Not sure I fully get it.
Sure. So imagine if machines are doing a big chunk of the buying and selling, their understanding of what a company's worth will really shape how the market sees that company.
So if an AI model decides a company's undervalued based on tons of data, that could trigger a buying frenzy and drives the price way up?
Exactly. And on the flip side, if the AI thinks a company's overvalued, you could see a big sell-off.
Okay, that makes sense.
Yeah.
But what about the risks? What if these AI models are biased or misinterpret some signals? Couldn't it really mess things up?
That's a totally valid concern. AI is only as good as the data it learns from. And if the data's got problems, the AI can actually make those problems worse.
So we're basically in this uncharted territory where the old rules might not apply anymore.
Yeah, it's both exciting and kind of nerve-wracking, right?
Totally. We're seeing this huge shift in finance. It's not just about picking stocks anymore. It's about understanding this whole new system and how technology is changing the game.
And even if we don't all become quant wizards ourselves, we can still benefit from learning about all this stuff and adjusting our own strategies.
Absolutely. This deep dive has been so eye-opening. I feel like I finally have a good grasp on what's driving quant investing in China and what it all means for the future.
It's been great exploring this with you. And as you continue navigating the investing world, I'll leave you with a final thought.
Shoot.
If AI really becomes the dominant force in the markets, how will that change financial information itself? What will be the most valuable knowledge in this new era?
Wow, that's a big one. It feels like the answers will only come as this AI revolution keeps unfolding.
Exactly. It's a journey we're all on together.
Well said. Well, everyone, thanks for joining us on this deep dive into the world of quant investing in China. It's been a fascinating ride. Be sure to check out our show notes for links and more info on everything we discussed. And until next time, keep learning, keep exploring, and stay curious.